Okay, this video is meant to go back and review financial statements for anyone that is feeling overwhelmed by financial statements or confused by financial statements. So if you're feeling this way, it is probably because part of what you need to know has not yet been memorized. So let me tell you what you need to memorize. You need to know these accounts, and these you don't have to memorize because we're always going to give you those. But when you see that account, you need to automatically be able to say what type it is. So you need to be able to say, if I say cash, you need to say asset. If I say accounts receivable, you need to automatically know asset. Allowance for doubtful accounts, if you've gotten past chapter 9, you need to automatically say contra asset, which means that it's the opposite of an asset, which means that it goes to reduce the asset that it's contra to. So if accounts receivable has a debit balance, the allowance account has a credit balance because it works the opposite. That's what contra means. And so on and so forth. Once you can do that, then the second piece that you need to memorize is that on the income statement, you will report revenues minus expenses to record net income. So if it's a revenue down here, any of these three, and there are plenty of others, but they usually say the word revenue or some other way you would know that it was a revenue, go on the income statement. Any of these expenses also go on the income statement. And notice that is the only place that they go. If it's a revenue or expense, it only goes on the income statement. Statement of owner's equity is beginning capital, which you'll find right here, plus net income, and I've made a note, it comes from up here, your revenues minus expenses, minus withdrawals, which is the capital account right here, equals ending capital. And then on the balance sheet is assets equal liabilities plus capital. So any of these assets and the contra assets go right here. Any of these liabilities go right here. And then when we say plus capital, we're talking about the ending capital that you calculated up here. That is when you started with the beginning capital plus net income minus withdrawals, you got to your ending capital. So that is all that there is to know about the first three financial statements. When we ask you about the order of the financial statements, what we're talking about is the fact that in order to do the statement of owner's equity, you have to have calculated your net income because it comes from here. In order to calculate your balance sheet, you have to have done your statement of owner's equity because that's where you get ending capital from. So that's why we say that you have to go in this order because each is dependent on a number from above. So the only other thing that I want to go in here and say is most of these students are familiar with. The ones that give people problems are accounts receivable versus accounts payable. Here's how you can remember this. Accounts receivable has to do with what your customers owe you. You need to receive it from your customers. Accounts payable is what you owe to your vendors. You need to pay it to them. So you're going to be getting money from receivables, so that's a good thing. Here, that's why it's an asset. Here for payables, you're going to be paying money to vendors, so therefore it's a liability. And then the other ones that are a little bit confusing for students are unearned revenues. This is a liability because you owe them the work. So an unearned revenue means that somebody has paid you up front for magazine subscriptions and you haven't given them the magazines yet. So for you, it's an unearned revenue. You owe them the magazines. So anytime that you owe somebody work that they've already paid you for is unearned revenues. That's why it's a liability. And then prepaid expenses are an asset. This is because you paid up front for insurance coverage. And that means that you prepaid for some coverage that you haven't used up yet. So that's an asset. That insurance coverage that you prepaid is an asset. It could also be prepaid rent. And then the last one that students sometimes get confused about is cost of merchandise sold. This is the cash outlays that you paid for the merchandise that you plan on selling in your business. So it's an expense. It's the cost of the merchandise that you sold. So that is an expense also. And so hopefully this will help you remember how to figure out what accounts go on the financial statements. Let me know if you have any questions.